Here they come. Well, we'll get started here in just a little bit. We're going to let people get into the webinar. Looks like we might have a low attendance, and I'm going to blame the sunshine for that.
I'm loving the sunshine though, even though I'm not out in it, so I'm not going to complain.
Yeah, I'm glad I don't have a window view, so I would probably not get very much done today if I did.
Oh, I feel sorry for you.
No, you don't.
Well, I did hear from a couple that are normally with us who had conflicts today, so they're going to jump on the recordings.
Yeah, I did as well.
Okay.
But with that being said, I guess we'll just go ahead and get started. So thank you for being here today. And thank you. You know, we're very thankful that we have sunshine today. And I'm sure that's why there's conflicts. Everybody's going to be out in the yard if they're able to. And so that's why Kathy has her sunshine yellow acquiring capital and insurance slideshow. We do have special guest Grant Sullivan with Sullivan Insurance that will join us a little later on in the program. And with that being said, Kathy, thank you for being here and doing this again this week. This is our last week, and I will go ahead and turn it over to you. I'm turning my camera off. So thank you. Kathy.
Thank you, Nicole. And good morning, everyone. Here we are in week 6 already. Can you believe it? I can't. Time sure flies. So I hope you are all doing well. And I have heard from a couple of you who have submitted your draft business plans, and that's great. If I haven't responded yet, I am certainly making an effort to do that before week's end. So it's great to have you with us. And today we're going to talk about acquiring capital, and then Grant's going to address, as Nicole said, the insurance portion of the program. So let's start. You may or may not need outside funding to start the business that you're considering. But in the event that you do, the bank or investors are basically going to look at the 5 C's of credit. These are the elements that a borrower should have to obtain credit. First, of course, is character. So what kind of person are you? Remember that even though you may have a separate business account and everything may be an LLC and be in the business name, you as the individual are still tied to that business, and you are still responsible for the activity of that business. Obviously, the business doesn't have a brain and cannot make decisions on its own. So you are the brains behind the business. And so they look at you as an individual and your character. Do you have integrity? What is your capacity? Is there sufficient cash flow to service the obligation of the debt that you're occurring? And so we talked last week about the cash flow and cash flow projections. Typically, an investor or a banker will want to see 3 years of cash flows. It's always the most difficult to do year one, especially as a startup business. It's kind of, you know, you get into that kind of like throwing darts at a dartboard because it's the unknown. So again, remember, we started with the expenses and then found that break-even point and decided that, yes, it was feasible. Our cash flow will work. And then we can complete the rest of that year with the growth that is projected in our written plan, we have to make sure that those numbers match whatever we have written. And then we can go ahead and build out year 2 and year 3. The expenses are a little bit easier to do in that regard, because we basically suggest using the average cost of living index over like the last 4 to 5 years. And so once we've established that, we'll simply go through and increase all of our expenses by that percentage for next year 2, and then from year to year 3. And then of course, whatever your goals and your growth plan are, will then flow accordingly in your income to cover that obligation. So then we want to make sure that if we add a loan to this, and we obviously have to make repayments for that loan, is our cash flow still sufficient to cover those costs? And so if you went and downloaded the cash flow loan tool, you would see on the second tab, there is a loan tool. So you can simply plug in the amount of money, the term, and the interest rate that you anticipate, and it's going to automatically figure out what your monthly payment is. And then it will also take that number and automatically plop it into the loan payment at the very bottom of that cash flow sheet. So that will certainly make a difference. And so then we look back again and say, can I make X amount of sales additionally to cover this loan payment? So once we get to that point, it still needs to cash flow, and that becomes our new break-even point. So then someone who's loaning money is also going to look at the capital, and that's your net worth. And if you recall, we discussed the difference between a personal asset sheet versus the business asset sheet. So your net worth is basically all of your assets minus all of your debts, and that is your net worth. And then it's going to look at your collateral. So do you have enough assets to secure the debt? So in the event that you should default, your lender has basically a lien against your assets, and they could recoup their outstanding debt through those assets. And also, what are the conditions? What are the conditions of the borrower in the overall economy? So again, they look at the economy as it sits today, what's projected in the near future, and that helps them make a determination if this is going to be a good loan to make, or if there's some issues that need to be addressed in it. So the character refers to the financial history of the borrower. What kind of financial citizen is this person or business? Which is why we suggest that you begin with someone that you have a banking relationship with. So they already know your history. They can look back and say, oh yes, this is a very responsible financial citizen. They make their payments on time. They're able to meet their obligations. And so they will continue to do so as we move forward with a new loan. The capacity refers to the ability of the business to generate revenues in order to pay back the loan. So how much cash is available? Capital refers to the capital assets of your business. And I also will add there that it's the cash injection. If the bank or investor is expected to make a loan on this, they want some personal skin in the game also. They want you to assume part of the risk as well. And we'll get into those parameters in just a little bit. Collateral describes the assets you pledge in order to receive a business loan. So obviously, we're probably most familiar with having collateral in our homes, so or an automobile. So perhaps the home is valued at $150,000, and we only owe $75,000 on that mortgage yet. Then that $75,000 obviously becomes collateral, just like an automobile. If a fair market value is $5,000 for that automobile and we still only owe $2,000, we have $3,000 that we could pledge as collateral for the loan that we're about to undertake. And the condition is the ability to repay the loan based on the activity of the business the overall economy, and the rate and the term of the loan. So obviously finding a bank who has a good rate, a lower rate, and a longer term is obviously in your best interest. Additionally, it makes your monthly payment lower. And so therefore you're able to accommodate that in your cash flow. So, trust me, I'm a banker, right? Yeah. Well, hopefully we do trust our bank. And that is what is very important. Again, someone that you're familiar with, someone who has a good reputation in the community, and someone that you feel comfortable talking with one-on-one. The banker will become your best friend. They can definitely help you, not only as you start up, but down the road in expansions, assessing lines of credit. And so you want to build a really good relationship with your personal banker. So we need to ask ourselves, is this project actually bankable? So we want to shop for a bank. Like I said, that can be someone that you currently are doing business with is generally where you should start. Who do you have a good relationship with? And then check them out. Collect their brochures, look at their online statements, and have discussions with them. That's kind of as you're shopping around. So if you do business with more than one bank, maybe you don't have a preference. Then it becomes comparing apples with apples. So what is the minimum balance that you need to require? Do they require that you have enough money to make an automatic payment out of your business account? Those are certainly things. What are their service charges? Those are all things to compare when making a decision. Again, assuming that everything else that they have offered you is comparable or the same, such as the term and the interest rate. It will also depend on what the portfolio of the bank is at any given time. So many of them have certain parameters they need to stay within. It may be that they're able to have 200 loans up to $250,000. Well, perhaps they're already at that maximum for the moment, and so they are not able to assist you. So there's lots of different things that are taken into consideration from the bank's perspective as you're having a discussion with this bank. So the first thing you want to do is basically, I suggest checking 3 different types of bank: a local bank, a regional bank, and a national bank. Again, they all have parameters. There's pros and cons to each. And when we get into the national, the banking industry has changed so much that really what kind of control it still remains locally, and what kind of decisions do they make? Do they sell their loans off, or do they keep them themselves? These are things that are important when you make a decision who you're going to do business with. And look at, what does Bank One offer a small business compared to Bank Two? Again, compare apples with apples. When you've done your homework to collect your brochures, so on and so forth, and had a conversation, and then what are their requirements for making a loan? How much are they going to require that you put down? How much collateralization do you need to have? And what are their penalties should you fall behind on a payment? So you really need to feel comfortable and check things out before you make a decision on who you're going to start this small business banking relationship with. My suggestion is you start by having this discussion, and even find out if they're interested in looking at your business plan and your cash flows to consider you for a loan before you make application. You certainly do not want to sign anything until you're sure you want to go through with them, because as soon as you do, one of their first actions is to look at your credit. And of course, once they ask for your credit report, your credit takes a hit. It's not a huge hit, but if you do that 2 or 3 times through the course of looking for this loan, it will drop your credit score. And of course, we do not want that at all as we're ready to obtain a loan. So they're going to look at how much money do you need, Okay, how many products or services are you going to deliver? They want your business plan. They want a credit score. They're going to want a debt to income ratio. How much is the percentage of your debt compared to what you're bringing in? And again, they're going to look at that both from the business perspective as well as your personal, because again, you are responsible for repaying this loan. Even if the business can't do it, you're co-signing for the business and it will be your responsibility. So what is the cash down payment? What's the collateral? Is it realistic? And how diversified is your business, which plays into what is the current economy looking like? Then they have two options, and that's basically to approve it or decline it, right? And so obviously we want it to be approved. We want it to be approved without having to come back and ask for further information. So we want to be as thorough and prepared as we possibly can be. So right now, most banks are requiring a minimum credit score of 680. And that, if anything below that, unfortunately, they're probably not even going to be able to look at you, because we're going to talk about some other lending programs and opportunities that they have, other than just conventional financing. But even with those partners involved, a 680 is about as low as they'll go. If you're in a 700, 720 range, then it's much more comfortable for them to have a discussion with you. That debt to income ratio that we talked about, they want it at 1.6, or in a percentage, that's about 39%. So in other words, 61% of your income is greater than your debt. So your debt should not be more than 39% of your income. Cash down payment, I said they wanted skin in the game, right? They want you to put some cash down. Right now, on a regular conventional loan, that's about 25%. So let's just say you're looking at a $100,000 loan, which isn't astronomical for a small business startup. They want you to have $25,000 cash to put down. That does become quite burdensome, and that's difficult for many small startup businesses to do. So oftentimes they'll look at an SBA guaranteed loan program, which we'll get into more in depth in a minute. But with that, one of the advantages is that typically it's only a 10% cash down payment that they're looking for. So again, on that $100,000 example, that lowers that to $10,000. So that is much more feasible for small businesses. And collateralization is at 100% right now. That is very difficult. So again, on a $100,000 loan, they want $100,000 of collateral. They will use 50% of your balance sheet, or in other words, what you have your assets listed at, or 75% of the appraisal value when considering the collateral that you have. Now, fortunately, there is a program through the state of Ohio called the Collateral Enhancement Program, where if a small business falls short on their collateral that's required by a bank, if you meet their requirements, they will partner with you to provide the rest of the collateral to the banker, so the bank will go ahead and make the loan for you. And that's a good economic development tool right there to grow businesses in Ohio. So while this seems like it's very daunting and it's frightening almost, there are avenues that we can work with the banks. And basically what we at the SBDC do is take a look at what you're looking for, where you are in your credit score, your debt to income ratio, down payment and collateral. And then we are able to suggest other programs that we might be able to partner with to make the deal happen. So if you can't meet all of these minimums, please don't get discouraged and think that's it, I don't have a chance, because there are other alternatives. Some of those include, obviously, the conventional financing. That's pretty much what we just covered. Then there's the U.S. Small Business Administration. They basically have two programs that work. Obviously, they've been in the news a lot lately with the pandemic, and they talk about their economic injury loans. Those are completely separate and different from their standard programs, okay? They have a 7A and a 504 loan programs guarantee that are ongoing and have been around for years and years. Basically, the way a guarantee program works with the SBA, it's a relationship between the bank or lender. And in this case, for the SBA, it does have to be a conventional, traditional bank. But they have a relationship with them and they make the choice. The bank makes the choice if they're going to use one of these programs through the SBA. So you as a borrower can't say, I want to use an SBA loan. Okay, you might suggest that, but it's the actual bank's determination. So if you go in and you meet all of those parameters we just talked about, and they want to just flat out make you a loan, that's going to be their first choice because it's less bookkeeping for them. And typically it's more profitable for them, right? Because after all, that's why the bank is in business. It's to make money, particularly on loans and investments, okay? But if they say, yeah, we like this project, but this is your first time in business, maybe you don't, again, meet all of those numbers precisely, your risk is higher. And what they want to do is lower the risk for them. So they might look at a 7A or a 504 loan program. 7A programs are for furniture and fixtures, office equipment, and basically operating capital. So those things that are very transient, and there isn't a lot of way for them to basically retract and resell those in the case of a default. The 504 loan program is for land and buildings. So if you're going to purchase land to put up a building, then they could consider a 504 loan program. But either way, whatever you are borrowing the money for, and if it's a mixed use, they definitely can use a 7A and a 504 together. So when you apply, they will ask you basically to break out the total amount of dollars into what are all of the funds going to be used for. So that helps them make a determination as well. But basically what happens is the loan says, yes, with SBA approval, we're going to go ahead and make this loan. And then the SBA can deposit up to 75% of the loan into the bank. And so in the event that you default, the money is there, okay? And it falls on the federal government. Of course, we don't ever want to see that happen. But again, it's lowering the risk for the bank, so they're more eager to make that loan. There's also the, it's up here. We're going to go backwards. I apologize. There we go. There's the U.S. Rural Development Program, and that is another form of federal funding, and that basically addresses agriculture businesses, as well as businesses in small rural areas, which of course, most of us will qualify for. So there's a business and industry guarantee, which works very similar to what I just explained in the SBA. There's energy efficient grants and loans. So if you are going to make energy improvements to an existing building that you're going to put your business in, there are some nice grants and loans available if you can meet the parameters of that. There's also the Ohio Development Services Agency, and they offer, as I spoke to, the Collateral Enhancement Program, and that does become very helpful. And then, of course, there are alternative funding sources. So we might look at a microloan program. Micro is just what it says. They're very small. Some of those are being made through a downtown Wapakoneta partnership, for instance, or downtown Lima Inc. And those are generally up to maybe a $10,000, $15,000 range. Also, another tool in the toolbox is the local revolving loan fund. Those do exist in Mercer, Auglaize counties, as well as the city of St. Mary's and the city of Wapakoneta. So if you're looking to work with a bank, we can partner again with the SBA as well as a local revolving fund. And basically they take second position to the bank and they'll contribute a portion of the loan so that the project can move forward. We kind of look at that as bridge financing or gap financing, right? So the bank says, again, let's use the $100,000 project. The bank says we'll be able to go 75,000. Well, then maybe the local revolving loan fund says, okay, we can loan the other 25,000 so that this customer can now move forward and grow their business in our community. And then growing ever popular is crowdfunding, right? And there's lots of websites out there, Kickstarter, Indiegogo, Funding Circle, and GoFundMe. And if you've never checked those out, I encourage you to do so. They are very, very interesting, and actually has been very successful with lots of projects. But generally, the way these will work is you're asking for a loan, and in return, you're going to allow the people that contribute to your loan first opportunity at your product. So you will give them X amount of product in exchange for the money that they're loaning to you. And obviously, you don't move forward until you've reached the amount that you need to raise. So again, take a look at those if you haven't done so. And it's really quite entertaining sometimes to see the videos they put together to sell themselves and their business idea. So where do I go from here? We have learned an awful lot in the past 6 weeks, and there's just a lot of information to garner. And so I would suggest that, again, you continue to work with the Small Business Development Center, complete your written business plans, complete your cash flow projections, and share that plan with whoever you feel is necessary. It might be your business partners. It might be potential investors, family members. Again, the Small Business Development Center, we're here to help you tweak it. I'm not going to tell you it's a good plan or not a good plan because I don't know that, and it is your plan. If you and I wrote a plan for the same business, they would look totally different. That's what makes yours unique and creative. But again, we're here to help you say, oh, I completely understand what you're doing. Yes, this makes sense. Yes, your goals are smart. Yes, you've done a nice job on your mission statement. All of your I's are dotted and all of your T's are crossed. Now you're ready to move forward and present this to a person at the bank. We also can help you register your business with the Ohio Secretary of State's office, whether that be a sole proprietor, partnership, limited liability company, S Corp or C Corp. We can help you with all of that. We have an operating agreement template that we can share with you, and you can easily write that to be acceptable to the bank. We will assist you in applying for your EIN number through the Internal Revenue Service. This is not rocket science. You certainly can do it on your own. But again, because of our experience and the number of times that we've been through this, we know what they're asking for, and we can simplify the process for you. And the EIN number, again, becomes the Social Security number of your business. So you file your income taxes, like the graphic on the right shows, you will do an attachment to that depending on how you organized your business, whether you're a sole proprietor, an LLC, or a partnership, so on and so forth. And it's imperative that you then begin filing your year-end taxes with that EIN number. Opening a checking account is one of the first things you'll want to do. And once we get your articles of organization from the state and your EIN registration, we also will supply you with a resolution to open a bank account. And basically that tells the bank that you have registered, you're a legitimate business, and you, as one of the owners or the only owner, have the authority to do all these things through the bank legally as the owner of that account. You also need to purchase liability insurance, which is very, very important. So I suggest that you contact a homeowner's insurance agent, someone that you buy renter's insurance from, or sometimes, depending on the type of business you have, your business association can provide that for you. But we're going to learn a lot more about that in the second half of our session this morning with Grant Sullivan of Sullivan Insurance. So, as we've discussed, You have lots of abilities. You're the owner, you're innovative, you work with the team, you're motivated, successful, you take risks, you provide solutions, you're the manager, you're the money person, you provide leadership. All of that encompasses wanting to be an entrepreneur, which is where we started 6 weeks ago. So I hope that you have found these sessions to be beneficial. And I do want to tell you, if you have not received the information regarding the program that's coming up, it's going to be very, very timely. We are working with the Ohio Small Business Development Center, as well as Now Marketing Group, and they are going to be running a social media program for us. The way that's going to work is, again, there's no charge for it. We've learned from Nicole's marketing presentation how important it is to be on the web and in social media. So they're going to start with a webinar presentation that will last approximately an hour. And then following that, you will have access to over 45 videos. Our advertisement says 25, but as they started developing them, they wanted to be sure they included everything. So we have a mass amount of video, training videos that you can access that will actually walk you through the steps and make sure that you're doing it correctly. And it's just going to be a wonderful tool. We're very excited about it. And that's going to kick off, oh, I don't have that right in front of me. Do you, Nicole, as we spoke about it yesterday? I want to say it's May the 13th.
Yes, I actually have it right here. And it is a free program that you are offering. And it is on May 13th.
At 4:00 p.m.
And I will send a copy of that flyer to everybody with the link and the email that they will receive with this recording so that they can register.
Thank you. Fantastic. So pre-registration is required. Again, there is no charge. And once you register, just like you did for this program, we'll go ahead and send you out a link so you can access the webinars, which will then also give you access to the training videos. And we've created a Facebook group so that anyone that participates in that can start to talk to other businesses and get feedback and input and hopefully best practices so that together you can all grow in the Lima, Allen County, Northwest Ohio region. So with that, I will ask if there are any questions about what we discussed today before turning it back over to Nicole. All right. Well, I'm not seeing any. So again, thank you all very much. You know how to contact me if something pops up or if you want more specific information. And with that, have a great day.
Thank you, Kathy. I appreciate it. And now we would like to introduce Grant Sullivan with Sullivan Insurance. He is our guest speaker today. Thank you, Grant, for being here. We appreciate it. We know that insurance is all in its own kind of animal, but business insurance especially is something extremely unique. So with that being said, I'm going to go ahead and turn it over to you.
Hey, thanks, Nicole. Can you guys hear me okay? Can you hear me okay?
Yes, thank you.
Those folks are muted. Can you give me like a real quick snapshot of what sort of businesses are on this call, or any idea? I mean, types of businesses?
So we have anywhere from nonprofit to we have a yoga studio, we have a trucking company, we have Autism Life Center that's on here as well. And I apologize, I'm that's not all of them, I'm sure, but those are just a few to name some.
That's great to know, because I don't want to talk about stuff that doesn't have anything to do with that. That's very helpful. Hi, I'm Grant Sullivan, and I'm the principal agent here at Sullivan Insurance. We are an independent insurance agency, and about half of what we do is business insurance and nonprofits. So we got pretty good handle on what you're doing, and I would applaud anybody going through this program. I can tell you from experience, it's a lot easier to keep a existing business going than it is to start one from nothing. And I know my grandfather started our business and didn't have the resources that you have here. So it was a lot of hard work, but but I know it's rewarding, and it's definitely great for me to come in and be able to have support in a business. So just good to talk to you for a few minutes about business insurance, hopefully be helpful, and then maybe answer questions if there are any. I think the main reason, or I would say probably 30% of my business clients come from first-time people who are opening businesses. And I always talk to them right after they talk to their banker or right around the same time. So these topics go really hand in hand, because a lot of times folks will go to get a business loan and the bank will say, well, we need to see insurance. And so they come right over to me. So you're ahead of the game since you already know what you need. And I think that one of the biggest questions people have is maybe, why do I need insurance? They just don't see the risk or the level if you're opening something up that's very minimal or even a part-time business. So I think it's obvious probably now that the bank wants you to have insurance because they want to protect their collateral. If they're loaning you money, they want to make sure if something happens that they're able to pay that back. You know, and that's true. So you're going to have property insurance for your business and liability insurance for your business. And they're probably going to go hand in hand, and we can put them together in one policy. But I always try to help clients think beyond, I have to do this, I'm protecting the bank, and really think about how it's helping you, right? Because it's your money, it's an expense. What's your business getting out of it? And really it is going to serve to protect your investment. And I think people just don't realize sometimes that everyone has some sort of exposure, whether you rent a space, whether you make a product, whether you do a service, you know, with all of that, something can go wrong. And so really for most businesses, their liability exposure is their biggest risk. You know, you might have $5,000 in inventory that gets stolen and you can replace it. But, you know, when you have a bad accident, then you can't come up with the money to provide your own defense. So I think that it's really important to think about liability insurance from that regard. And I would use this example. If something goes wrong in your business and now you're a target of a lawsuit or someone who perhaps needs to be made whole because of the damage you've done, not to be too callous about it, but their attorneys are going to go wherever the assets are. It doesn't matter if you have an LLC or if you protected yourself, they're going to go wherever the assets are. So that's going to be one of two things. If you have $1 million insurance liability policy, that's probably going to be where the assets are. That's the big attractive thing. If you don't, then it's your bank account. And it doesn't matter if there's $100 in there or 100,000. It's always better to have it be, you know, this $1 million pot of money, because that's where they're going to go. They're not looking at you anymore, in a sense, if something goes wrong. And it's really neat because you're a partner with the insurance company, and we hope that nothing ever goes wrong. But if it does, at that point, you know, you and the insurance company you become a very, very important person to that insurance company, because if you're sued, your business is sued. Now the insurance company has $1 million of their own money on the line. And you can rest assured that they're going to have the very best attorneys possible defending you, because they don't want you to lose, because if you lose, they lose. So that sounds a little hard and a little callous, but it actually is very practical. And I can give you an example. I have a client who is a small contractor who, this actually has happened many times, but they did a service. They provided a very routine wiring service on a business later on burnt to the ground because of the product that was installed. And it was, we're pretty confident it was a faulty product. But the problem is, the product was manufactured by somebody in China, bought over Amazon. Nobody knows who they are, how to get to them. So here's this business that burnt to the ground, and they're looking for somebody to make this right. So where are they going to go? They're going to go to the contractor, right? So if you get that letter in the mail, as my contractor did, that says, here's what happened, we're holding you responsible, we're demanding X amount of dollars, you're either going to panic and try to figure it out on your own, and then go spend thousands and thousands of dollars on an attorney to ultimately prove that you were innocent, or you're just going to march it right down to me and give it to me. I hand it to the insurance company, and now it is it is off your plate. I mean, they've got attorneys, they've done site inspections, they've got expert witness. I mean, that's the service that you're really paying for, for a $500 a year, liability insurance policy. And it's well worth it because probably nothing's going to go wrong, but it does all the time. And I guess the claim examples I think of is I've had a policy holder with an employee pulled out in front of someone, caused a fatal accident. And it was just an accident. It's just all it was, but somebody died. It's a big deal. And I've had, a contractor leave a power cord, someone tripped over it, got injured. I could tell you all day, you don't want to hear all these stories, but the point is these things do happen and they are just accidents, but they're serious and somebody needs to take care of them. And in those cases, I have a list of about 10 of them I could tell you, and not a single one of those cases did our client wind up going out of business. We paid on those claims. We should have. And when someone dies because of your accident, they need paid. That's the right thing to do. Hundreds and hundreds of thousands of dollars. But our client's still in business today, just like that hadn't happened. Things have moved on. I mean, obviously it's a traumatic event, but that's the preservation that can be had through insurance to keep your business going through those type of things. So hopefully that just helps drive home, the importance of why insurance goes beyond simply a bank requirement. Because you're also putting yourself and your family at risk too, down the road. Even if you protected yourself with an LLC, if you lose a lawsuit, the judgment is against your LLC. Now you've lost all the assets in that LLC. You've lost your business. So it's just better to buy insurance, a lot easier, peace of mind. So, when it comes to this, for most businesses I've heard about in this room, you're probably going to be able to package things up pretty well with one policy, maybe two. If you have vehicles, you might need an auto policy. But small business insurance can be handled very well through a business owner's package policies. And they're pretty flexible. We can do a lot of things with it. And there's a lot of other types of insurance we can get into. Nonprofits might need some professional liability if you do any counseling, if you have any certifications or anything that goes beyond simply a premises where people come. If you're doing a service that's specialized, you might need a special professional liability policy. But an agent who knows what they're doing can listen, can hear what you do, and then can find the right things for you. And I think the one piece that I would suggest that gets left out the most is life insurance. And I've begun to see that become a requirement of more SBA loans. I'm not sure what's changing there, but I think they're realizing that when you have somebody who's putting their own personal assets behind this, to pledge repayment, they might be a good upstanding person with a good credit history and everything. But if they die and there's $100,000 loan out there, who's going to pay that? So I do recommend business owners consider life insurance as part of their business portfolio. It can be a business expense, and it can really help your family or partners, if you are not there, to not have that burden of paying all of this back. And it could, again, help with business continuity. Perhaps you provide a service, and when you die, the service dies, end of business. That's okay. But perhaps you have a business that you want to continue, or you have family members, and life insurance can help with that. So very important, often missed. Another piece of the puzzle is often missed. I'll just plant the seed, is cyber insurance. We can provide insurance for access to networks, unauthorized disclosure of data, and so forth. Won't get into any of that now, but that's something to keep in mind, especially if you have a heavy web presence or do a lot with personal data, social security numbers, that sort of things. You have a lot of regulations on you right now that you might not even be aware of, and we can help with that. So I think, just to be real practical, we got to talk steps. How do you get this insurance product? About 70% of business insurance in America is sold by independent agents like us. And so you typically are not going to see, you often are not going to find this product from the name brand insurers that have the funny commercials on TV and stuff. That's just not what they're going for. They're much more heavy into home and auto insurance. When you get into business insurance, your Allstate, your Nationwide, they do some basic policies, especially Nationwide. They can get into some complex stuff, but a lot of the name brand insurance companies stay away from that. And so it's just a market that's dominated by independent agents. And so these are companies you might not have heard of. And so therefore, people often don't know where to begin. And I would suggest asking friends, families, business mentors where they've got their insurance. It's not a bad idea to ask your personal insurance agent if they can handle it, but ask questions carefully to make sure they know what they're talking about. And then I guess in a town like Lima, the easiest thing to do is to just jump on Google and look for independent agencies. And it's funny because they're all just pretty much last names. You know, I'm Sullivan, Wenger, O'Connor, Webb, Stolley. You know, none of those names are people who don't know what they're doing. So all of those are people who do business insurance, and they're probably going to be able to serve you well. So that's where I would start, is looking for an independent agent. And then I would encourage folks to make a couple of calls and ask questions, and you'll get a sense, you know, does this person care about my business? And not everyone will, and don't take it personal, but some people are going to see a $300 account that takes a lot of work and they're going to not be that interested. So A, are they interested? And then B, does it sound like they know at all what they're talking about? When there's a lot of fumbling and fidgeting and call you back, not sure, that might just be a sign that, you know, they've never done this before. So when you get a good feel from a potential insurance provider, I would say go follow that feeling and go with it. I wouldn't call 10 people. We know, I get these calls all the time. I can tell when someone's going through Google and calling every agent in town and waiting for the lowest number. And those are not people that you spend a lot of time with. But if you're able to get a good relationship going, get a good feel that they understand your business and they're asking you a lot of questions, I would go with that. And it's important because I think, as Kathy touched on, your banker might be your best friend. I don't think I'm anybody's best friend, but we do become an important ally. And you're probably going to be doing a lot with this person, especially when you're getting a startup going. And you're going to have a lot of questions. You're going to get people that send you 10-page lease contracts with all this stuff they want for insurance. And you're going to say, I don't know what to do with this. And we're the people that we call and we just take care of it. And there's not a charge for that because you're buying the policy. That's all you pay. You buy your insurance policy and we provide all the service you need. So it's very important to get a good fit here with your business insurance. And I think that, you know, the one question everybody cares about is how much is this going to cost, right? That's all great. We need insurance, fine. But if you're giving me a number I can't afford, then it's out the window. So the important thing to remember with business insurance is that really we price based on the risk, right? So it's not based necessarily on the size of your business, which is counterintuitive. You know, so I have, you know, as an example, you know, I've written policies for, like a small kind of a hair salon startup with a couple of seats, you know, $350 a year. I mean, very affordable. And maybe they're bringing in pretty good money. You know, what is that? You know, $30 a month in insurance. I've got accounts that are basically a one-person operation, probably not bringing in any more money than that, but because they manufacture something that's inherently very, very risky, that is like $1,000 a month insurance to spend. And so while we're going to ask you a lot of questions about your income and your sales and what your projections are and how much stuff you have to insure, ultimately, you know, the insurance company is concerned with what do they stand to lose and what are the chances they're going to lose it. If you're hauling hazardous materials across the country, a little more risk. If you're delivering furniture once a week, kind of middle risk. You know, if you're driving yourself to an appointment here and there, low risk. You know, that's how to look at it. So we can help you with all that. I think it's very, very, you know, you have minimum premiums for business policy. You're not gonna get into anything for less than $400 or $500 a year probably, but you're going to be able to get a good feel from an independent agent who knows what they're talking about up front about a price range. And so then you can talk about it from there. If you call and say, here's what I do, here's how many people I have, what do you think the ballpark is? We can tell you. And if that's not feasible, you can say, okay, I need to revisit my business model. I did not know insurance was going to cost me $8,000 a year. I need to know what to do differently now. So hopefully we can be supportive there. I like hearing nonprofits. We do a lot of nonprofits. You want to find an insurance company who knows what they're doing there. You know, Philadelphia Insurance, Cincinnati, Markel. There's a lot of companies that we access that are specialized and essentially they don't only do nonprofits, but they're very niche type market because they have coverages. Nonprofits need coverage for, you know, abuse and molestation allegations. They need coverage for professional. They need coverage for counseling sometimes. And so none of that stuff is, you know, in an off the rack business policy that a barbershop has. So those are some of the kind of specialized experience and knowledge that we can bring to the table. So, and I find when I'm talking about insurance, it's usually best to end sooner than what people might expect because your eyes glaze over after too much insurance talk. But I hopefully we did give you some practical steps about how to contact and what you should be looking for when you do contact. And I don't know if there's an option on here to ask questions, but I'd certainly be willing to answer if there are any. Nicole, what do you think?
They do have the option to either unmute their microphone and ask a question directly, or you could put it in the chat box. I know that we did have a comment earlier that came through, and it was from, you can see that as well, but she said that she's having a hard time finding insurance because of the way that her business model is. And you know, she said great information, and she'll probably most likely give you a phone call since you were able to give so much intellect. So thank you very much, because I know insurance as a whole, like I had mentioned, is completely different for whether it's property and casualty to life insurance to, you know, vehicle insurance. Like they all have different metrics. And, you know, I think with you making the comment about how, you know, when you're talking to other agents, not just yourself, but the questions that they ask and their demeanor on how they treat you as a customer, to get those types of questions answered says a lot about the company. And how, you know, if how they're going to handle if you were to actually have a claim in the future, even, you know, because even though we hope none of that ever happens, but, you know, with your scenario that you had mentioned, you know, somebody, their business burnt down, which how terrible, and then even possibly a death, which isn't included in a workers' comp claim, which is also insurance that some people need, that isn't included in with the business insurance, which is completely separate as well. So do you recommend that people, when they call you, that they bring a copy of their business plan with them then, so that you're able to help decipher some of the questions that these business owners may have?
Yeah, I think the key there is to bring the questions more than necessarily the business plan. I might need it if it doesn't make sense. If you tell me what you do and how you do it and how you're structured, and you've got through with that whole pitch, and I don't understand it, then we probably need to look at the business plan. Right. But for the most part, we've seen a lot, and I can usually get my mind around what you're doing. Probably the most difficult one I had recently was a nonprofit that basically operated a business, for-profit business, normal type of business, but it was owned by a nonprofit board. All of the income was going to a nonprofit to fund ministry type things. And so the insurance company had to get their mind around, is it a nonprofit? Is it a business? It's both. How does that work? But I never saw their business plan. It all came from conversations, and we were able to figure it out. But I would say have that available. What might be important, probably the thing you're going to have is pro forma projections or some type of idea of what your annual sales and payroll are going to be. I know that you might not know for sure, but we've got to know that because we're going to probably use that to calculate part of your rates. So that's got to be figured out. Yeah. Yeah.
Which is good to know. So thank you very much. Well, it doesn't look like anybody put any questions through. So well done, Grant. A lot of great information. I learned quite a bit myself, even though I don't have a business, but maybe someday, you know, and, you know, you're right. Depending on what you do, you know, versus your Uber driver versus your hazmat driver, you know, semi truck driver definitely has different liability and different claim insurance adjustments and claims and, you know, everything that comes with insurance. So thank you very much for your help and for being here today. We appreciate it. And I will send everybody a copy of Grant's information as well. So thank you, Grant. We appreciate it. And I hope you have a wonderful week and enjoy
Anytime.
the sunshine today.
Yeah, you
Thanks a
too.
lot.
Take care,
Thanks.
guys. Thanks.
Great.
Bye, everybody. Have a great week.
See ya.
Bye.